So today we will be talking about Prefinance Home Loans. My Prefinance Home Loan. Here in California, it's very hard to get a home. If you have a bad FICO score, if you're $10,000, $20,000 worth of debt or more, your chances of getting a house are impossible. So what I developed is a system that will help the working class families, give them a new opportunity, a fresh start, and into a house. And this is part of me talking about homeless prevention. Because if we put people in homes, what better way than prevent the homeless, right? Now, there's going to be 3 ways to qualify for this loan, and these are the 3. You have to be part of the working class, so you have to have a steady job, proof that you've been working for a while, and you have the income to afford the loan that you qualify for. The second one would be bad or low credit, obviously, because your credit is bad and you can't afford for a loan. So this is the program that will help you. And the last one will be a significant debt. So if you're in $14 in debt, that does not qualify for this. This is to help families that are truly hurting out there, giving them a fresh start and being right back to getting back on their feet. So qualifications, once again, you gotta be part of the working class. So yeah, not everybody's gonna be able to qualify for the loan, but we gotta start somewhere. And why not start for the people that are actually, making America the beauty that it is, the working class, the people that are out there every day laboring and making stuff productive. Bad or low credit. Your credit score could have been shot because of medical bills. That also falls under substantial debt. You might have a loan on a medical bill from your insurance that didn't cover completely or something, and now you're in debt. And these medical bills are huge. Another reason why we need single payer, but that'll be another video we'll be talking about. So these are the 3 qualifications right here on how to get it into a pre-finance home loan. The next thing we'll be talking about where these pre-finance home loans come from. So now that we're talking about how we're going to get these homes, earlier we were talking about the bailout. Well, it's time for the banks to bail us out. Now, in this bill, this program, what I request is for the banks to do the right thing. And I'm not asking them for all their wealth or all their profit or anything. We're just asking for 20% of their foreclosed homes to fall under the pre-finance home loan program, which is 1 out of 5 houses. And this is how we prevent homelessness. This is how we shift the renters to homeowners. This is exactly where the houses will come from. I mean, these are houses that they came up on with predatory loans as it is. So I'm just asking for the banks to do the right thing. I'm not trying to go in with a full seizure or control, or a takeover of the bank. But we really need them to bail us out at this point. The situation has gone out of control. Or if they don't want to bail us out, then we're going to have to record, we really got to get on that public banking as fast as possible. Because those banks, I'm sure, will take care of the people because they'll be ran by the people. And this is basically the direction that it's going. So there's still plenty of money for them to make in this program. There's the interest rate on the loan. There's the closing costs on the loan too, which I also want to cap on because I don't want them to take advantage of that. But the homes will be coming from the foreclosed homes that they basically, in most times stole because they didn't explain the loans right. They took advantage of elderly folks, whatever the cause was. And they took some lavish vacations, they got some raises and the bonuses, and they wasted all the money, and they got a bailout out of it. It's our turn. So what we're going to do is go over a quick example of how this program works. Now, let's say you qualified for a $200,000 mortgage payment under our program here, right? And you have your bad credit score, well, obviously is one of the reasons why you're here. And let's say you owe $30,000 in debt. You had a medical expense. Unfortunately, we still don't have single payer, and they got you hard. So this is your debt here, right? Now we find a foreclosed home that's worth around $200,000, but foreclosed at $130K. Foreclosed. Right? So what we would do is we would get this $30K and put it into this foreclosed home that would put you at $160K, $160,000, right? And we would add a closing cost of around $10,000. We would try to cap that, obviously this is still negotiable, but $10K would be your closing cost. So you're now at $170,000 and in the home. Right? So with $30,000 left in equity. So from debt to now equity. Why should we give you this money? People are going to ask. Well, the reason why we need the $30,000 worth of equity is, let's say you're not responsible, even after we do all this for you and we put you in the house, and your house forecloses. Well, this is how the bank can recover. There's still $30,000 worth in that house that this house would obviously no longer qualify in part of the 20% of the foreclosed homes for the program. And they can sell this house at the street value and still make $30,000 in profit if you don't, hold your end of the deal. If not, they still make the $10,000 or whatever the loan cost would be, whatever the percentage cap we would put on that is. And their interest rate that you pay for that house every month for approving this loan. But in the end, the person that pays for all of this is you. This loan is being given to you by a bank, which is their job, and you're responsible for this $170,000, which includes your $30,000 that you were in debt on. But now your only payment is this house. And it's a payment that you would be able to afford because you qualify for a $200,000 house. So technically, you would be able to get into a $230,000 house maximum, because we don't want to go more than $30,000 worth of equity in these homes. Now, let's say you're responsible, you get through it. Well, we reward you with $30,000 worth of equity for being a good homeowner for your first time actually going through this process. So in this situation, everybody wins. The people, the creditors that you're in debt to, they all get paid in full. The bank, they get paid in full. Within 2 years, you can refinance and get another interest rate, and this bank that covered your loan would be paid in full. Now, if you foreclose and you don't make the payment and you lose the house, then the bank takes over the house, sells it at full, and they make up the loss and another profit. So they get paid in full. So really nobody loses. The bank wins. You win. Moral value goes up. Everybody wins. We'll talk about this more in the next segment. Finally, I'd like to talk about the benefits of the Prefinance Home Loan. So now that you've been qualified and you got your house and you got the nice little happy family in their new home, the benefits of owning a home, we all know what the benefits of home ownership are. You get a credit score that rises. You get a moral value that rises. You have a place you come to that is yours, that you invested in, that you don't have to worry about being evicted. If you get into a rut, you can always refinance your home. There's so many benefits of home ownership, and the benefits also with this program come all the way around the board. Like the banks will get paid in full for any loans that you were in debt on. Creditors will get paid in full. Normally, the reason why the credit scores are so high and the interest rates are so high is they're trying to make as much money as possible until you can't pay it no more. And then these businesses get a percentage from the insurance coverage on these debts. So that's why they're so high. But what if you actually pay these businesses the whole debt in full, where they don't have to go through this whole process? They would rather have that. Now the bank too, once you refinance and you get another loan on that house, that bank gets paid in full. Everybody should be happy with this loan. I mean, you just can't have a heart to turn it away. So part of the process of putting the heart in the machine is, you gotta walk that talk. And I'm planning on putting homes and roofs over people's heads. I'm planning on preventing any more homeless numbers. 70% is ridiculous, it's embarrassing, and we need to stop it. The pre-finance loan offers a solution for everyone. There's on both sides of the field, and if not, we will push for public banking to make it possible. There's got to be out there people that are ready to represent the people. I'm one of them. I'd like to thank you for joining us in this segment. We got more videos to come to show our proposals and our campaign and the kind of things that we're working on. We're not just out there screaming and yelling. We come with a true plan. We come with real ideas. I used to do home loans. That's how I came up with this idea. So follow us, donate to the campaign. My crowd pack's right here, crowdpack.com/C/Megs for Congress. And, let's put a heart in that machine. It's time. And put a roof over your head at the same time.